Today we're going to break down a trade on the SPY this morning, how I bought call options and then switch to put options to really make some profit this morning. Breaking it all down right here in this video, so make sure you guys stay tuned. What's going on, guys? Happy Monday morning, baby. We survived another weekend. At least I did. Hopefully you guys are also surviving and thriving out there. If you haven't already, do me one big favor, hit that like button, subscribe button, all the buttons down below. Let me know in the comments what stocks are you looking at this week, what's hot, what's not. Today, the SPY up, down, all around. What is going on in the market? All right, so pulled up behind me right now is the Interactive Brokers workstation that I use on my desktop computer. I've got multiple monitors pulled up. I got multiple charts. I like to use all types of different tools. But today, I'm showing you guys kind of the move here in the options. One thing that I want to stress about options is a lot of people are afraid to trade options. They think that options are this, crazy, hard to trade thing. But when you look at some of the opportunities, like this option here, this put contract went down to a low of almost 10 cents and then rallied back up to almost $1.50. With the amount of volatility and the action that we have in the market right now, I think there's a lot of money to be made trading options. If you're going to be a trader, the idea of trading penny stocks and, investing in these really crappy companies, getting rich one day, there's a lot more money to be made trading options on the overall market or on quality stocks like Amazon, Apple, Google, Facebook. These large companies, the options can move, 200, 300, 400, for 500, 1,000% in one day sometimes. So I think there's a lot more options. Options. There's a lot more opportunity to trade options. And I'm really going to start showing you guys kind of what I'm doing when I'm trading and what I'm looking at, and kind of showing you guys the mistakes that I've made, what I've learned, and all of that fun stuff. So right now you can see I've got the chart pulled up on the 417 call put options. All right, so first thing we're going to look at is the SPY. What is the SPY doing this morning? Obviously, we got an overall downtrend. The SPY has been getting crushed, and right now down to the 417.48 area. Obviously, this is after the fact. We didn't know that the market was going to move all the way down there to 417, but we did know a couple different things based on what we were looking at with the chart. So pulling up the 15-minute chart here, I'm a big fan of the 15-minute chart. If I'm going to be trading, I like the idea of 15-minute chart because it really gives me a better idea of the overall trend, what is happening. Staying away from some of the smaller time frames. If I'm trading options, maybe I might go to the 5-minute time frame once I see a setup with the 15-minute chart. But when I'm really looking for setups and I'm looking for the idea of resistance and breakdowns and all that kind of stuff, I really like to keep an eye on the 15-minute chart here. So this morning, the SPY rallied from 420 up to a high of 424. I did not make any trades this morning on this action because that, for me, the best thing to do is kind of just wait. Don't get, too crazy about jumping in right at open. I don't need to go and force myself to jump in right away and do all that. But if you see this big move, we had the big downtrend. So obviously from the 424 area down to 420, there was a lot of money to be made. I just didn't get in on that. So the trade that I made this morning is pretty simple. I ended up buying call options off of this 419 level. You can see kind of that support right there at the 419s. Even though we had all this resistance up there, I bought 420 call options, believing that the market might push back up to the 421 area before rolling off again and then pushing down to that 417s where it's at right now. Oh my gosh, 417.25, baby. Let's go. Hey, if you guys enjoy my content, do me one big favor, hit that subscribe button. Also, if you want to learn more about Interactive Brokers, this is a broker that I'm using for trading options, for trading stocks, for trading crypto, and all that fun stuff. They've got a free scanner right now you guys should check out. I'll put a link down below, Interactive Brokers. You can see here we had this green candle. The market pushed up. I was up on the call options. I ended up getting out for a very small profit because I saw, number one, that this 420 area was turning into resistance, right? We've got the EMAs. This is the Ripster EMAs there on the TradingView website. It's totally free. If you guys check it out, tradingview.com. They've got the Ripster EMAs. You guys can search it, Ripster EMA clouds. I've really been loving these EMA clouds. It gives me a lot of information, gives me a very good kind of idea of where resistance and the idea of maybe where the market might push back up to highs. Because remember, the market is moving in waves, right? It's constantly moving in waves. So the idea that the market's going to just drop from 424 down here to 419 like that, it happens sometimes, but there's a better chance that the market kind of goes like this, kind of creates that wave, kind of like it did here, where it rolled off there, it got down to this level, and then kind of had a little peak back up, and then now selling off again. Wow, those put options are going to go nuts right now. So you can see, if you look, resistance right there, 420 turning into major resistance. You can see that 419 area being support. So if we look at this chart, what do we see? If we break below 419, where is our next support at? If we go and we zoom out here, really the next support isn't down until about 415 or less. So yeah, about 415 there on the day. If we go look at the daily chart, probably see it's a little bit better. Pretty much the bottom of this other candle down here being 415. So that was our idea. Like if this breaks below 419, it should pretty much crack pretty quickly and get down. Oh my gosh, 416 now. Wow. The time, sometimes I take profit early and it ends up going exactly. What do? We go over here and we buy put options. You can see these are the put options that I ended up buying this morning. These are the March 14th. They expired today. So same day expiration. And look at this move right now, going this morning from a low of about 15 cents right now. Oh my gosh. Look at this. From about 20 cents this morning, these options moved up now to a high of $1.70. Remember, if you buy one options contract at 20 cents, you pay $20 for those for the put options, and then that $20 would have turned into $171 because there's 100 shares attached to the idea of that options contract. So look at that insane move. Now the market kind of bouncing back off of 416 right now, so you can see how volatile this can be. A lot of people get roped into trading penny stocks and trading, stocks with kind of illiquidity. The thing about options, if the overall market's moving and there's, the market is pretty much always moving, obviously, there's plenty of buyers and sellers. There's plenty of liquidity. You're not going to just have some insane, halt and then the whole entire option drops 50%. And well, now that I say that, maybe the market gets halted and it happens like that. But in general, I believe that the risk to reward is much better for trading options on quality stocks like the SPY, like Apple, like Tesla, things like that, where there's actual liquidity. A lot of people are trading it and there's a lot of action on those stocks. So you can see right here, I bought the March 14th 417 put options when they were 80 cents up here, 80 cents. And my average sell price was $1.20. So we bought here when we broke out. You can see that 5-minute candle breaking out of this kind of downward trend, bouncing off support there, and then rallying up to this level here. I ended up selling into this push here. I have a thing right now I'm really focused on is taking profit, Patrick. So many times have I been in a trade, and I know you guys have done the same exact thing where you're in a trade, you're up big, you're getting greedy, you're like, wow, I'm up 200%, yeah, baby. And then all of a sudden it starts crashing back down, and you end up holding, you end up hoping and praying and all that fun stuff. And well, you end up getting out for a loss, or you end up getting out for, much lower price than you would have hoped for, or you would have wanted to get out when it was at the highs. And right now, look at that, 475. Oh my gosh, 180 now. It's pushing, baby. These put options, these are the like I said, 417 put options. So the idea is the lower the price gets below 417, well, the higher those options, the premium gets higher and higher. So right now they're kind of pricing in a $1.75 move below 417 on those options. So with the price of the market right now at 416, there's not $1.80 in premium there between, the price of the actual stock and the options and all that. So these options, if the market doesn't keep moving lower, these options will drop in price really quickly, especially because they're same day expiration. But you can see also these options that I bought earlier, buying the call options. I ended up buying wow, look at that, 181 now. I ended up buying call options this morning as well, like I said, off of that 419 area. I think we're going to get a bounce, and I'm getting out for a small loss there, $20. So trying to, keep my losers small here, trying to lock in some profit, and just starting the week out here kind of in that situation. The thing about this as well is I'm trading with cash account. I don't need tons and tons of money. Remember, with options, I can buy those options, like I said, for 80 cents. So I spent $160 for a total return after commissions of $74. So I spent $160 and I walked away with $74 in profit after those commissions there on that trade. I probably could have got a little bit better on the commissions if I would have waited and wouldn't have market sold there, but I wanted to get out. I didn't want the market to rally back up on me. And you could see you would be up 800% if you were trading these options right now. If you bought down here at the bottom when you saw that high in the overall market, you'd be up 800% just trading those options alone. Like I said, you could pay $20 for these call options, and you could be selling right now for $190 roughly around there. So just giving you guys an idea, if you're trading penny stocks, you're trading low float stocks, really kind of start to look into options and research options and learn more about options, because I think there's a lot of opportunity. And the cool thing about it is, as well, if you're really kind of good at trading the low float stocks, you're good at reading the charts and all that, you could apply that same idea of trading, of chart reading, of support, resistance, and everything. That same idea applies to, pretty much any stock. So if you can read the low floats, you can read the small caps, well, you can obviously read the options market as well, and you can trade the SPY. And that's kind of what I've been working on lately and kind of retooling and refocusing. So I'll be giving you guys some more updates as we do some more call options and put options and on trade options and options in general here in the next few weeks. But give you guys a little intro on kind of what I'm working on right now. And you can see this insane move, 800% move on the put options. Those 417 put options that expired today. So up to $1.90. Beautiful, beautiful, beautiful. Obviously, I could have taken, I could have waited and been a little bit more greedy here. But like I said before, I was up 50%. I made a 50% return on my money there on those call options or the put options. So I might as well take my profit. You don't always know the market's going to continue to go lower. And like I said, the thing about the options as well is even if the market, goes lower and it gets down to the 417, if there's not enough of a difference between that price, those options can end up kind of going flat, or you'll end up losing the premium there. And so, if the market closes here at the 416 level, well, those call options, the put options are only going to be around $1 once, the difference between the price of the strike and the actual underlying price of the stock. So right now, people are kind of pricing in the idea of a bigger move here. So like down like maybe 415 is kind of where these options are pricing the close at right now. So the market is at 416. These options are kind of trading with the idea that the market continues to go lower and gets down to that 415 level. Because remember, there's a premium, between the strike price being 417 and wherever the market closes at today here. So that's kind of the idea. And I'll give you guys more kind of breakdowns and all that fun stuff, trading options and kind of giving you tips. One thing I'll give you right now, number one tip, is just because something is cheap, just because an options contract is cheap, does not mean you should buy it. Remember that, all right, my friends? Just because it's cheap doesn't always mean it's a good investment. I think a lot of people get confused sometimes. They're like, well, I can buy this option contracts for only 10 cents. It'd be so cool. I could buy 1,000 of them for 10 cents. It'll be a good deal. Well, if the price, doesn't work out and the option expires worthless, well, it doesn't really matter how cheap you paid for it. It's not like buying a stock. You can't hold it and hope and pray forever. All right. So if you guys haven't already, do me one favor, hit that like button, subscribe button, all the buttons down below. I will talk to you guys later on.